Hey guys, good morning, welcome to the live session of Stock Sniper Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AFX, we have you covered. The future of Forex is zero commission. Here at AFX, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stock Sniper Trading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, Hanko Trade. With spreads as low as 0 pips and leverage up to 500x, Hanko Trade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using Hanko Trade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. Hanko Trade.
Welcome to Stock Sniper Trading. In today's tutorial, we will be going over the Bollinger Bands, which is another main chart technical indicator. Bollinger Bands were created in the 1980s by a financial analyst named John Bollinger. These bands calculate the volatility in the market through complex technical analysis. Additionally, the Bollinger Bands can be used to identify overbought and oversold conditions, as well as a trend following indicator. Basically, if the price moves closer to the upper band, it indicates an overbought condition. However, if the price moves to the lower band, it indicates an oversold condition. The Bollinger Bands consist of 3 lines, the upper line, middle line, and lower line, and are separated by a certain number of deviations. Finally, these bands help you understand whether the price is at a fair level to purchase at. For example, think of a middle line as a magnet or the average. As the price drops to the lower band or rises to the upper band, eventually the price wants to gravitate back to the moving average middle line. In this example, we have our yellow upper line, we also have our lower bottom line, and we also have our middle signal Bollinger Band. And we can see price action when it's on the lower Bollinger Band, it is bearish. And when we get to the signal line, we're looking for a crossover to the upper Bollinger Band. Bollinger Bands are main chart indicators available on all platforms, where you simply select them in the indicator section. The Bollinger Bands serve 2 purposes: to measure the nominal trading price range and to signal when a price contraction or expansion is forming. The setting is automatically calculated for you, where the default setting has the moving average set at 20 periods and the standard deviation set at 2. These 3 lines generate 3 moving averages, composed of an upper moving average, a middle 20-period moving average, and a lower moving average. The middle Bollinger Band is considered to be a trend line. When a price is in an uptrend, the middle Bollinger Band will be rising, as will the lower and upper Bollinger Bands. As long as the price stays above the middle Bollinger Band, On the other hand, a falling middle Bollinger Band and falling upper and lower Bollinger Band is considered a downtrend. As long as the price stays below the middle Bollinger Band, during a consolidation period, the upper and lower Bollinger Bands will contract and come close together, forming a tighter band. And the middle Bollinger Band will be trading sideways. This period is not ideal for trading because it is very choppy and has lots of head fakes and false candles. Furthermore, as these bands contract tighter, it is signaling that an expansion is on the horizon and we may have a breakout or breakdown in the near future. In this illustration, we can see that we have our green line is our lower Bollinger Band, our white line is our middle signal line, and our red line is our upper Bollinger Band, which is a resistance level, and we have our lower Bollinger Band as a support level. We have price action at the lower Bollinger Band where it bounces off as we get some buying momentum and we get to the signal line where we're looking for consolidation or breaking above the signal line. And we get to the upper Bollinger Band, which acts as a resistance. As price action consolidates at the upper band and above the signal line, then price action should be in an uptrend. The Bollinger Band is a main chart technical indicator. It consists of 3 lines, upper, lower, and middle signal. The middle signal line is a 20-day SMA. It's separated by 2 standard deviations. Bands contract, which gives us consolidation, and they expand, which gives us volatility in the market. And it is used to identify support and resistance and identify overbought and oversold conditions. This is an example of Bollinger Bands, our technical indicator, on our TradingView charts. And in this particular example, we are looking at the GBPUSD and we are on the 5-minute time frame. We have Bollinger Band contraction, where the bands are very tight together, which gives us a period of consolidation right at our white line, our middle signal line. We start to see red candles start breaking below the white line and going to our bottom of our Bollinger Band, where buyers come in and start buying, and it bounces right back to our white signal line. Now it is acting as a resistance and we're getting more selling pressure to the downside. We start to get Bollinger Band expansion. This is telling us that there's more volatility in the market. And now the bands from the contraction phase are starting to expand and price action is starting to move. And in this example, C, with this volatility, we start to see we are getting into a bearish downtrend where we're getting more selling pressure as we're continuing to move to the lower Bollinger Band and break below it. We continue this bearish downtrend until we get to D, the lower Bollinger Band, where we start to see some support where buying momentum comes into the market and we start to see bullish candlesticks forming. These candlesticks and bullish momentum get right back to the white signal line, E, where we get price action is above the signal line. So as we get more bullish momentum into the market, we go to F, the upper Bollinger Band, which starts to act as a resistance level now, where we get more selling pressure, pushing the price down to G, where price action is below our signal line again. And price action continues to hit the bottom of our Bollinger Band, where it's bouncing off, where we get some buying momentum and some consolidation down there. And H is our contraction phase again, where we start to see that the Bollinger Bands now start contracting and getting tighter again. And this is a consolidation phase in pricing after the big expansion and the volatility of moving up from moving bearish to bullish. And now price action is cooling off in our contraction phase. This is another example of our Bollinger Bands from our TradingView chart. This example is GBPJPY and we are on the 60-minute time frame. So we have our consolidation contraction phase where price is just cooling off and consolidating at the lower Bollinger Band and our signal line. Then we do start to see expansion. We get volatility, and we see that price action has a bearish downtrend. And we also have a bearish engulfing candlestick that starts this big momentum to the downside. And we reach a level of support where we get some buying momentum into the market, and we get a bullish uptrend. And we also get bullish candlesticks crossing above the signal line, which is our 20-day SMA. And price action gets to our upper Bollinger Band, where we acts as resistance, and it gets rejected, coming back down to our signal line and breaking below it. And then we start to see consolidation and a contraction phase again as the bands start getting tighter for our next expansion and volatility phase. So this is the start of our Bollinger Bands. We can see that the price action was near the top of the Bollinger Band and above our white signal line. And now we're breaking below the white signal line and going down to the bottom of our Bollinger Band. We're starting to expand, which gives us volatility in the market as the bands are expanding from each other. And we're starting to see price action go down bearish, reaching a level of support where we do get some buying momentum. But it is continuing bearish because it was a big downtrend. And now the buyers are now gaining some momentum, and they're closing the candlesticks above the middle signal line, and we could continue to the upper Bollinger Band. So with some further consolidation at the signal line and upper Bollinger Band, we start to break above and get a nice uptrend. Again, our Bollinger Bands are expanding as we get more volatility. And price action is continuing to go higher, making higher highs. Quick recap. Our Bollinger Bands are a main chart technical indicator. They consist of three lines: our upper, lower, and middle signal line. Our middle signal line is a 20-day simple moving average. These lines are separated by two standard deviations. The bands contract, that is a consolidation phase, and they expand in a volatility phase. These bands help us identify support and resistance levels, and they also help us identify overbought and oversold conditions. We hope you enjoyed this tutorial on the Bollinger Bands, and on our next tutorial, we will introduce the Fibonacci retracement tool.